Debt can have two sides. It can help you become wealthy, but it can also lead to financial struggles. In this video, we'll explain how rich people use debt to increase their wealth and how debt can be a strong tool for achieving your goals and dreams. 1. The rich build empires. The story of debt isn't new. It goes back to the 1800s when Rockefeller did business worth $400 billion in today's money. Rockefeller wasn't born rich, he was a farmer's son and dropped out of high school. But he became the richest American ever, richer than Jeff Bezos, Bill Gates, and Elon Musk combined. Rockefeller wasn't great at school because they didn't teach about money. However, when he got a job as an assistant bookkeeper, he learned about business inside and out. He knew he could make a lot of money if he had some initial money. So, he started a small agricultural trading business, borrowing $1,000 from his father. That was his first debt, but it gave him a strong start in the business world. In just 2 years, he was making $17,000 in profits. During this time, the oil industry was growing. There was a market for kerosene oil, but making it from coal was hard, and storing it in barrels was expensive. Rockefeller used gasoline instead of coal and made barrels in-house at a lower cost. These innovative techniques impressed bankers and lenders, and they started giving him money on better terms. This changed the game for Rockefeller. He used debt smartly to buy smaller competitors and create a monopoly in the oil industry. This monopoly helped him get discounts from railroads, so he could transport kerosene at lower rates, making it affordable for many households. By the 1870s, the farmer's son became a 31-year-old millionaire, and his company, Standard Oil, refined 90% of the oil in the entire US. What's remarkable is that Rockefeller always paid his debts on time, but never hesitated to borrow when he saw an opportunity to grow. 2. The rich don't take salary. Many of us have heard about billionaires living in big mansions, driving fancy cars, and going on luxurious vacations. But did you know that they don't use their regular salary to pay for all of this? In 2021, Elon Musk shared a secret in a tweet. He said, "I only have stock, so the way I pay taxes is by selling stock." This might sound a bit confusing, but let's break it down. Elon Musk doesn't take a regular salary, but he owns a lot of Tesla stock worth billions of dollars. Instead of selling the stock, he borrows money using it as collateral. This has two benefits. First, he doesn't have to pay taxes on borrowed money. Second, he avoids paying capital gains tax by not selling the stock. So, Elon keeps using the stock as collateral to get loans, and when he needs to pay off one loan, he takes out another. This way, he continues to live a very comfortable life. It's like having an evergreen line of credit. In simple terms, he's using his valuable stock to get loans and enjoy a wealthy lifestyle without selling it. It's a clever financial strategy. 3. The rich love real estate. Regular folks might wonder why rich people take loans to buy many houses around the world, even when they have plenty of money. Well, the main reason is that using debt can help them save on taxes. Let's say you find a house worth $1 million. You borrow most of that money from the bank and get the rest from investors. Your loan repayments and property upkeep cost you $120,000 a year. If you can rent the house for $140,000 a year, you make a profit of $20,000 without using your own money. The best part is, you don't have to pay taxes on this income. That's because you can claim depreciation on the property, which is like saying it's getting older and needs repairs. This depreciation can offset your rental income for tax purposes. So, even though you made $20,000, you might show a tax loss of $5,641. But you still have $20,000 in your pocket to spend as you like. 4. The rich don't mix things up. When Elon Musk decided to buy Twitter, he borrowed $13 billion, even though his net worth was around $250 billion. This might seem strange to regular people, because with $250 billion, you can easily spend $13 billion. But there was a good reason behind borrowing the money for this deal. Deals like this are called leveraged buyouts, or LBOs. In an LBO, the borrowed money is backed by the assets of the company being bought, which in this case was Twitter. Lenders give money with the expectation that the acquired company will make a profit, and its future earnings will pay off the debt. Musk didn't just buy Twitter as a profitable business, he also sees it as a way to bring social change and protect free speech. However, this also means that Musk has some doubts about Twitter's profitability. So, the LBO makes sense, because if Twitter makes money, Elon will benefit greatly. But if Twitter doesn't do well, Elon's risk is limited to the equity he owns in it. Lenders can't make Elon personally pay off the debt. They can only recover the loan by selling Twitter's assets. Only time will tell if these assets will be enough to pay off the whole debt. But by borrowing money, Elon made sure that his personal assets were safe and all his businesses remained separate legal entities. Lenders can't force him to sell his $94 billion worth of Tesla shares if Twitter fails, and he can still continue to live his luxurious life. 5. The rich generate liquidity. Some wealthy individuals buy and hold assets for the long term, intending to pass them down to their children as they know their value will increase over time. They prioritize securing their family's future over being debt-free. However, this doesn't stop them from seizing profitable investment opportunities. In April 2023, Mukesh Ambani, the chairman of Reliance Industries, borrowed $5.5 billion for a nationwide 5G rollout in India, despite his substantial wealth. He could have funded it from his assets, but chose to ensure a prosperous future for his 3 children. Implementing 5G can contribute $180 billion to India's economy by 2030. Ambani's willingness to borrow demonstrates his commitment to securing his market share in the telecom industry and leaving a lasting legacy for his family. 6. The rich inflate out their debt. In 2012, Mark Zuckerberg secured a mortgage for his house at an exceptionally low 1.05% interest rate, while the average rate was 2.76%. This favorable rate was due to his substantial net worth of $15.6 billion, which made bankers confident in his ability to repay. Zuckerberg made savvy financial moves with this deal. He immediately moved into his desired house, invested his money in high-return opportunities, and spread the house payments over 30 years, minimizing their real value in the face of rising inflation. This allowed him to enjoy his dream home, generate significant profits, and reduce his expenses over time.